Welcome to ShortView Trading. It's your morning market here for Monday, 2nd of November. What matters today and this week for traders? Well, what a fascinating week it's going to be. Genuine exogenous events that could influence market direction really quite meaningfully one way or the other. And of course, I'm talking about the US presidential election. How it pans out could have a very big influence on the type of fiscal stimulus package, the size of it, and whether or not it occurs, and therefore a major influence on the direction of the equity market and the size of the rally or indeed the pullback. But ahead of that, there's lots of encouraging things happening, things that are encouraging for the bulls. And what I'd highlight is, firstly, very simply, the S&P was holding key levels on Friday and rallying from intraday lows into the close and rallying overnight in Asia. So for now, support's being held in the S&P 500, as you can see in the chart in front of you now. But on top of that, the behavior of bond yields was fascinating. Bond yields are pushing through their 200-day moving average, pushing through that key resistance, despite the fact that risk assets in the form of equities and oil have been selling off. This is very unusual. Normally in sell-offs in risk assets, bond yields go down, bond prices rally as people seek out bonds as a safe haven. This time it's different. Bond yields are backing up, pushing through that key resistance level with the yield curve steepening as well. So what is the message of the bond market? And it's a pretty encouraging one, I suspect, to do with the outlook for economic growth, the nearing of the vaccine, and all the sort of potential for a fiscal stimulus over coming weeks and months. So for the bulls, that's encouraging what bond yields are up to. It's also encouraging what Bitcoin's up to, breaking out to new highs, major highs over the course of last week, at the same time as equities are selling off. And of course, as we said before, Bitcoin tends to lead the S&P 500 in its direction. And it's also encouraging what we're seeing in high yield spreads. Credit spreads haven't widened that dramatically, unusually for a sell-off. Normally in sell-offs they widen quite sharply. We're not seeing that. So it's non-confirmation of this wave of risk aversion in equity markets and in the oil space. And added to that, the message of the models are short-term market timing, 1 to 2 week models, our risk appetite models, and other equivalent models is increasingly clear and consistently on buy. With that backdrop, with that encouraging price action in many other key asset prices apart from equities, the key question becomes, is this a wave 2 relief rally, or is this the beginning of something more meaningful? And our suspicion is the election will be critical in that respect. But for now, and with such optionality on potential outcomes, binary optionality, options is a good way to play this type of risk reward. And to see how we're doing that, please see today's Daily Rag, available to subscribers via the website. So what are we watching this week? Well, it's a big week, of course. The presidential election, as we've already announced, is utterly key. But then we have the Fed on Thursday with a press conference. That'll be watched closely. Very important as well. On top of that, it's a big data week. It's the first week of the month. So you get payrolls on Friday. You get the ISM manufacturing, non-manufacturing surveys out of the States. And you get PMIs on Mondays and Wednesdays. And a whole host of other stuff, including the Bank of England on Thursday as well. So earnings continuing. On top of that, in the US, those continue for the third quarter earnings season. So lots to focus on and lots to think about. So that's it from us. That's your morning market hit for Monday, 2nd of November. Thank you for listening. Please do subscribe on YouTube. Simply search under ShortView Trading or follow us on Facebook, Twitter, and or LinkedIn. Thank you for listening. Stay safe. Trade well.